Good fall, everybody. How's everyone doing? First day of the equinox. S- So, it's going to be a battle this fall. I have a feeling like it is every fall, October's and everything. So, it's going to be a battle. What you need to do, David, Brock, is you need to arm yourself with knowledge, technical knowledge, to know all the key points in the market.
Hey, Coach, can you hear me?
I can, yes, Blake. I can hear you, Blake.
Hmm.
Yeah, I can
I
hear
can.
both of you.
Yeah, okay. So I don't know what's going on with Blake, but anyway, can everyone there hear me? David, Brock, can you hear me out there in our wonderful community? Okay, so that's good. All right, so you guys know we have a promo going, and look at all this work that the team does every day. That's a time saver for you. I don't know about you guys, but I don't have time to do all this for all these different instruments. So if anything, even if you didn't think the work was great, it's definitely a time saver, and I think the work is excellent. So you're going to get active patterns in play. Okay. You're going to get the chat room. You're going to get Pauly. You're going to get our all every day to help you thrive in the business. So let's get to the markets. Right here, you have the Euro 61.8 didn't hold. Here we are, Custard's last stand at 78.6. So if we're going to get a turn in the euro and this double bottom's going to hold, it has a dig in its heels right here. So risk reward, if you want to fade the dollar, not a bad time to do it. I think the jury is still kind of out because when you look at this on a daily, if we push one more time, we'll have a third drive if we head up towards par. So pretty neutral there. We're getting some follow through in the end to the downside. I'm not expecting, at least initially, any kind of collapse. I figured between 107, 106.30, this is really going to be the key test. So just like this is going to be the key test in US dollar yen around 106.40, still another 100 pips from here. The correlation with what's happening in yields is pretty tight. So yields coming down too, and this 160.5, if we're going to get a higher low, should dig its heels in right around this level, just like the yen should dig its heels in. If the yen takes out that breakout at 106.30, there's bigger problems. Also want to point out the S&Ps. Again, draw a line right here at 29.75. That's really going to be a problem. See how many times we've almost tested it here, and now we have some moving averages coming in there. It's not going to be hard to get a 2-week reversal. I still think there's a chance for another push up, but if we take out 29.75, that becomes less likely in my view because that'll take it down to 29.40, and that's a breakout. And we take that out, we're in trouble. That's the way it looks to me. We may be. I don't know. The S&P started off sharply higher. If you're a bull, you want to hope that this U.S. dollar yuan is putting in a right shoulder here and not going to new highs. New highs is going to be risk off, at least another push of risk off. And what else do I want to cover? The metals, silver way outperforming the gold here. And perhaps it's going to set up a failing rally. 1870, I think, would be about halfway, 61.8 back, and gold starting to come off now, but there is a possibility we take out these stops, head up towards 1535, 1545. That would be a sell to me. This is also related to yen. So really, I think the linchpin in the market right now for yields and metals is US dollar yen. And here's the bigger picture. Okay, as long as this pullback holds above this breakout line, which this did measure 109, but we had a pretty negative week. This is going to be the key for risk continuing, and gold just being a failing rally to sell, and whether or not yields it's just a pullback or yields are going to new lows. So that's my take on the way things are looking to me today. Any questions on anything I've covered before I turn it over to Blake? Hello, Hammett. Hello, Monica. Any questions? Okay. So we'll see what Blake has to say. I think Grega did the week ahead video. So Blake, did you watch Grega?
I did. I actually I watched it, and he always puts together a great video, and I love having his view of the market because
Yeah.
it's something that I struggle with Elliott waves and Elliott wave counts. So it's like I said, it's always great to see his view. What's interesting is that we saw this sell off in the euro. Now the euro got killed overnight. The PMIs were horrible. Absolutely, just disastrous. Here, hold on real quick.
Yeah, I'm gonna take the charts.
And so as you here, I'll just show it so I can show you. Forex Factory has a pretty good visual if you can see how horrid the PMIs were. I mean, look at the German manufacturing PMIs. I mean, those are just, talk about contractionary numbers.
Oh,
I mean, this is German, German manufacturing.
that's a ugly picture.
Yeah, it's pretty ugly. And Eurozone manufacturing PMI is just, I mean, these are all contractionary numbers, so they're horrible. And so the euro came under pressure, and we came down to the 78.6 retracement. Grega was looking for one more move lower in the euro, and I mean, I look at the euro as being a possible reversal candidate, but we haven't seen the right move, and right now, at this point in time, we until we get above 110.60, I mean, it's bearish. And but we have a potential double bottom down here, could end up being a triple bottom. We'll see if we can hit new lows.
That would clean out the stops. Maybe that's what I mean, that's what I would think. The double bottom, definitely the fact that we didn't make a new low on that last spike, ECB, tells me that, stops piled up under that low, bro.
Yeah, and I mean, what I would probably do, considering this is a descending wedge, is you look for one, more stab lower towards 109. I would think. Now, whether we get there or not is going to be key. And I'm not brave enough to sit here and go, okay, well, I'm going to buy the euro right here at 109, 65, and just hope for the best. I mean, I think, especially after the eurozone numbers, you have to kind of stand aside if you're a euro bull and say, well, let's see what shakes out down here versus trying to step in front of the freight train right now. And I think just looking at the euro technically, the only thing that would make me revisit here, I'll move this over here. Only thing would make me revisit, like, thinking, okay, maybe that was it, is a move back above 110. So you move back above 110 here, and then I might tomorrow think, okay, that the maybe the shakeout happened. But I'm not willing to step in front of it just yet. Not for me. So that's kind of what I'm looking at with the euro, and the cable's under some pressure too. I'll let I know there's Polly just posted in our chat room. And by the way, if you're part of the ForexAnalytix family, this is the ForexAnalytix chat. You guys can see that everybody that's in here. There's probably, I don't know how many people we got. 85 people here. Usually, within about an hour, there'll be about 100 or so. And yes, you guys are on Jumbotron. Does everybody know what Jumbotron is? I always make the assumption that everybody knows what Jumbotron is as an American, but we call Jumbotron the big the big screen when you're at a sporting event. and everybody, you know, when they put you on the big screen, you know, like they have the couples kiss sometimes, or you see cheer, you know, fans cheering. That's jumbotron. Well, you guys are and the guys in our there we go. There's a jumbotron right there. This is our private ForexAnalytix chat room, and I don't know why was I bringing that up?
You were going to say
Oh
about
yeah.
the UK.
Paulie just posted a few. Thank you. He posted that Brexit UK Supreme Court giving ruling on Tuesday on whether Prime Minister Johnson's suspension of Parliament was unlawful. And so, what happens if it's deemed unlawful? Does he get what happens? Do they impeach in the UK?
I assume that it just means that the parliament is not suspended. That basically,
Okay, all right.
but I don't know if there's any kind of other repercussions.
Yeah, okay. Amanda says there's nothing, by the way. And if you guys for those of you that, you know Amanda, she even though we can't get her to get on this webinar to actually speak in front of you guys, she's in this chat room a lot, almost all the time. Sometimes it seems like around the clock. She's a machine. So anyway, she said nothing. Nothing's going to happen there. So that's you know, a little bit of interesting moves, I guess, in the cable. But I have to say that technically, the cable reached its 50% retracement, right? So we reached a 50% retracement. We rejected there. That is obviously key resistance. I'm still in the camp, and I don't. I took the pound off personally. I took, you know, and I closed the pattern in play too. If you looked at that active pattern in plays, I took the pattern in play off up here. Excuse me. But I still feel that as long as we're above this 123.70, it's really hard to be bearish. This is big dotted line. I think, you know, it's quite possible between today and tomorrow that we, you know, do this. So for those of you that are patiently waiting to trade the pound, I mean, I think that's the level you have to do it. Now, just so you guys know, I'm traveling out of town. I'm going to Greenwich, Connecticut today. I'm going to the office tomorrow. There's another trader from Chicago that's coming in, and we're all meeting up and going to dinner and meeting in the office tomorrow. And then I'll be back actually on Wednesday. So I'll be back Wednesday afternoon. But I'm the reason why I'm telling you that is because I'm fearful that I'm going to miss this move. But for those of you that are going to be around, you know, in the next 24 hours, you know, you might be able to buy here. And I'm the only reason why I'm thinking that is because I might be on the plane while that's happening or asleep. So and when I trade the cable, just so you guys know, I do not personally, not right now, not ahead of, you know, knowing what's going to happen with Brexit. I don't put out orders to buy or sell the cable or any pound pairs for that matter while I'm sleeping or I'm not in front of my computer. You all understand the reasons why. I mean, I don't want to have exposure when I can't manage it, not in the pound. I can do that against other currencies. I don't mind doing that, you know, when I trade the Aussie or the Canadian or, you know, anything else, I'll put in orders. But there's, you know, with the pound, there's so much headline risk that, you know, and I trade pretty decent sized positions. I just don't want to put myself in a situation where you know, I'm I get into a trade, and even though I put in stops and whatnot, I don't want to just get into a trade and be stopped out, you know, and lose a, you know, chunk of money while I was sleeping. There's, you know, no reason for me to do that. So for me, I have to be around and being able to manage the position. So yeah, I mean, if the cable gets down here to 123.70, I might be a buyer if I'm in front of the computer, but if I'm not, I'm not. So anyway, that's kind of what I'm, you know, thinking about the cable for right now. A couple other things that I think you should be watching at least over the next couple of days. You got to watch the Kiwi. The Kiwi has been locked in this really nasty downtrend. Tomorrow, the RBNZ is expected to make a decision on interest rates. Now, the RBNZ did a surprise half a basis cut last meeting. They're expected to keep rates unchanged, which I would agree. I think they're going to keep rates unchanged. However, one of the things that we need to discuss is, are they going to be more hawkish or, dovish, and kind of set the pace for the market to expect more rate cuts moving forward? With if you look at like GDP numbers out of like the GDP number last week from New Zealand, I can pull it up here really quick. So New Zealand GDP, what's the headline number, was actually better than expected. Where is it? I have to find it. There it is. Okay, so GDP number was a little bit better than expected, and you know after New Zealand made their initial move and kind of shocked the market with the half basis point cut, and they prepped the market with we can go to negative if we need to. The market's pretty dovish, the Kiwi, and they expect a very dovish RBNZ. I think the risk here is the RBNZ says, okay, we've done what we needed to do for now. And if that is the case, the New Zealand dollar could actually squeeze. So tomorrow night at 10 p.m. Eastern, okay, you got to be watching the Kiwi if you're around. And it's not just the New Zealand dollar. I mean, the New Zealand dollar, we've got this, really strong down channel, and then what we're going to be facing is a false breakdown if we strengthen from here. But it's not just the New Zealand dollar, it's a lot of other New Zealand pairs. Take a look really quick at the Euro New Zealand. Okay, this is big time. Okay, this is a chart that I put up the chart in our ForexAnalytix chat room. I'm like, look, I'm not going to put this on our site because I had to really zoom out to see this. This trend line here basically comes in from 2011. So you're talking, an 8-year trend line coming basically right into, roughly, I redraw that a little bit, but wow, that's because it goes from point to point. Okay, comes in basically right where we're at, about 176 roughly. If the RBNZ is a little bit more hawkish or just not as dovish, and the New Zealand can bounce, look at the Euro New Zealand. I mean, and plus we had a false breakout here on Friday. This Euro New Zealand could very easily be 500 pips lower. Knowing how weak the euro is trading, if the New Zealand just gets like a squeeze, if you're talking New Zealand dollar here, just like maybe like 100 pip squeeze, 150 pip squeeze up to like 63, I don't know, 63.50 is 64 cents. That Euro New Zealand is going to be 300-400 pips lower. Like I said, if the euro continues to stay weak. So I think there's a lot of opportunity in these New Zealand pairs should the RBNZ be a little bit more hawkish. So it's something that I think you all should pay attention to. Now, one last thing, and then I'll ask Steve and Stelios if they have anything they want to add to anything that I've said. I want to talk a little bit about the yen, because I know Coach was just talking about the yen. Now, last week, the dollar yen really stopped at what I consider a very key resistance. The dollar yen stopped at the 108.50. Now, the 108.50 level is you can see right here, it's the 50% retracement of the highs in April to the spike low. It's also the 78% retracement of this spike high in August to the low. It's also 161% extension of this last spike lower, you can see it right here, 161% extension. This all comes in, and I'm just going to say roughly, say 108.50, but really it's between 108.20 and 108.50. That is what I consider really key resistance. And as long as we stay below this resistance, I think you got to be really careful if you're a gold bear. Okay, and I think precious metals. And Andre's piping in right now because he's listening in. He says there's a bearish shark formation here on the dollar yen. Which, look, if you guys are ForexAnalytix subscribers, you have Andre's work, and it's talking about the shark pattern, and Andre's looking at this as a reversal up here. There's a lot of risk for lower dollar yen. Now, obviously we're looking at what stocks are doing and how stocks continue to perform. But even if we got a spike up currently in the S&P, where's it going to take us to? Is the dollar yen just going to go back to 108? So I think the risk is starting to build for the dollar yen to break lower. And what I'd be looking for here is I'd be looking at all these spikes right through here. You can see the spikes right through here, right through here, right through here. And here, okay, right here on, August 2nd, right here, August 6th, spike high right here, August 13th. You can see that resistance really stuffed the market when we tried to move up here in the beginning of September. So, and you can see we found support right there today. So this is a pretty big support zone. So a break below 107 would be very bearish for the dollar yen. I think the dollar yen, the risk would be to revisit the 105 level again, and maybe even lower than that. So just some food for thought with the yen and with what's happening with the yen. So I gave you something to chew on with the yen and hopefully with the kiwi for the next couple of days. And let's see if my colleagues Stelios and Steve have anything that they want to add to this.
Good morning.
Good morning,
Hey,
guys.
Good morning, Blake.
Good morning.
Good morning, Stelio.
Hey,
my allergies are killing me. It's that time of year, and my nose is just like stuffed up constantly.
I had that a couple of weeks ago. I'm fine now. That's good.
Oh, that's good. We have to get a full-on season change. So for right now, it's
Steve, how is your nasal condition today?
I think it's fine.
Oh, that's so good. I'm breathing.
Oh, everybody wants to know that
Blake, my nose was stuffed, so I just picked it.
Hey, no, it's not that. I got the phlegm is ridiculous. Anyway, so
I wish I had a nose full of nickels if I had your nose, bro. And you guys can decide who it is. Anyway, that's what people used to say about Jimmy Durant. He had a very big nose. Anyway, a prehistoric age.
I don't think I have a big nose.
I was, anyway, I just wanted to see if you were insecure or not and respond to it. So, okay, right. Anyway, you're a very handsome guy. And if guys haven't seen what Blake looks like, there was a comment on Twitter that people have been listening to Blake for 15 years, and they finally saw what he looked like on the promo for our fall seasonal offer.
Wow, look at the euros getting a little spike up here. Wonder what's doing that.
Draghi blew his nose.
No, I think probably the market got a little bearish.
78.6.
Yeah, I mean, they got a little bearish following the numbers, and then they're getting squeezed out right now. Like I said, I wasn't brave enough to be buying the euro down there.
It is worth noting, though, Blake. Sorry, I lost the first 7 minutes, so I don't know if it's something you talked about. I got the part that you were speaking about the Euro USD, but I don't know if you said something earlier. It is worth noting, though, that despite German data deteriorating in a very, very nasty manner, the Euro-USD is not really breaking down. I mean, somebody would expect that with the biggest Eurozone economy, displaying such horrific data, PMIs, what was it, today's reading, 41, what was it?
Well, which one? We had manufacturing PMI was 41.
Hey, guys. Barnier says current UK backstop proposal is unacceptable. It's out via Bloomberg just now. So the cable is going to go, boop. Yeah, that's what,
and probably that's why we got a bid, from the cross rate, from the euro pound.
Maybe the euro pound. Yeah. Okay, sorry.
Well, also they know that Stelios covered it. So
yes, absolutely.
Right? you fade Stelios at your own peril.
So. Right.
So okay, I have nothing major to add to what you said, but worth noting that we're talking about the pound. For Thursday and Friday, we had a little rally, and Amanda very correctly in the chat room, she said that look, this was all on the back of Juncker's interview, which was not shown in full. It was kind of cherry picked by Sky, and they showed some of the most positive aspects. And she did say, look, wait until it's all the whole thing is released. And lo and behold, it wasn't as bullish as you might expect. So that's why the pound was giving away a little bit of some of its gains today. And obviously this headline now is not helping either. I really want to stress how bad the German PMIs were. I mean, this number—
they're horrendous.
41.4. This number you will only find back in 2008, 2009.
It was, to put it in months, I think it was something like a 120-something month low.
Yeah, it is a crisis reading. So we haven't had that crisis yet, but these readings are very bad. And remember, these are leading indicators. So don't look at unemployment. Don't look at
services, because they're also lagging a little bit. Yeah.
Yes. So this is the number.
You know what? You guys got to feel good. It has nothing to do with Greece.
We're doing okay.
Yeah, it's not exactly like that, because you know how it is.
I mean, these are numbers we haven't seen since, as you point out, like 2009.
Yeah. And we all know what was happening back then, right?
Right.
Yeah.
So
yeah, this is definitely not good. And the other thing I wanted to point out, I mean, it's minor news, but really we have to keep on top of it. The US-China trade fiasco thing so far. Basically, they were, in case people missed it, there was supposed to be a Chinese delegation visiting farms, I think, or something like that in the US.
Is in Montana,
Montana, and they canceled that. Maybe they prefer to go to Vegas. I don't know, but basically that's what happened. And just something to keep in mind that
better strip clubs, I guess, in Vegas, right?
They said it was a scheduling conflict, but I don't know. It's hard to know exactly what is true and what's not true. You know what I mean?
Yeah.
So
and Trump also said that he doesn't want a partial deal. He wants a complete thing. And he also said he doesn't mind if this thing doesn't get resolved before the elections. Surprise. But so both sides, especially Trump, he changes his tone every couple of hours. But for the moment, there's not too much positivity. Let's call it like that.
They will keep trying to prop the market with just throwing out, whenever needed, hopes that something is going to happen with a trade deal. If you remember, Stelio, a long time ago, I said I doubt it. They're going to go through with a deal. I think that Trump is only going to do that if he's desperate. And in my opinion, there's one reason for that. The deal cannot be a good one. So once a deal is actually done, then the market will have something solid to judge. To say, okay, is this actually a good deal? Is this a beneficial deal? If yes, fine. If not, no. And I doubt it he can bring on the table something that's going to be a game changer having to do with trade with China.
Yeah, and with
not him, anybody in general, to be honest. A lot of people don't realize, but in the US-Chinese relationship, China has the upper hand.
Well, Steve and Stelios, I'm going to pass it over to you because I've actually got to get ready to go on my trip.
Blake.
Have a good trip.
Yes,
Have a
thank you
wonderful
guys. And you guys have a great one. And everybody, I'll see you in just a couple of days. So,
Thanks, Blake.
thanks everybody, and make sure you take advantage of the seasonal offer. And Greg, if he's listening, and that was a great week ahead video. So
Indeed.
All right.
Thanks,
Thanks guys.
And
have a nice flight, mate.
I was just going to add, Steve, with S&P at 3,000, I don't think he's under any pressure to do anything with the trade deal, is he?
Oh yeah. Under current circumstances, absolutely not. Absolutely not. But if things start going really bad, then perhaps he might be pressured to if only he judges that by not bringing anything, it's going to be worse than bringing something. You know what I mean?
Yeah, absolutely.
But I think that we're going to still have plenty of time to be discussing this ordeal of daily news and rumors and I don't know whatever else moves the market in a silly manner. Yeah,
agreed.
Anything else Telio?
No, we had some minor Canadian data which was better, so really nothing
the Canadian, to be honest, hasn't really done nothing anyhow. I mean, the Canadian has really toned down. To be honest, having to do with the effects, the situation has been, with very, very few exceptions, the situation has been, more or less horrible. I was really hoping that last week with all the central banks, something would, give us a trigger, something to get the market moving. But we're still stuck there. I mean, we get important data, we get important outliers like the one we got today from Germany, and everybody was like, "Oh, there you go! Look at Euro USD go." But has it really gone anywhere? Because last time we left it on Friday, and I'm not gonna devote any more time on this. Just saying, and last time we left it, we were still stuck between this descending wedges support and this intermittent descending trend line resistance, and we're still here. So yeah, horrible data from Germany, there's no question about it, and they really, really point to an upcoming recession, but the euro is really not responding as much as somebody would expect. So undoubtedly the path of least resistance remains lower, but if we're talking about this kind of momentum, it's not even worth having a position, in all honesty. The only positive thing here is that at least if you're short Euro USD, you have a positive carry. So at least you're not paying to hold a short Euro USD. But on the other hand, the chance that at some point you're going to get a squeeze higher, you can get, like, with this momentum that we have to the downside, you might end up holding like for 30 days being short, and then having something come out of the market and see all your profits vanish within a single day of a squeeze higher. So in all honesty, not worth having a position in the Euro USD as long as we remain stuck in this descending wedge. So let me gather up your questions so we can group them up and go over them. I see questions about pound kiwi, pound Aussie.
No, you're singing today.
Yeah.
Pound Aussie.
Yeah. I mean, I'm like, I'm always like in a very positive mood to go over covering the markets, but you can understand and you can comprehend.
Yeah, you could tape it and play it for a few weeks.
Yeah, it's so frustrating that we've been, stuck here for so long that, every time I want to go over the charts, I'm like, oh my God, nothing has really changed, What are we doing?
We've been waiting so long.
So let me add one thing. Blake covered very nicely all the confluence of resistances up there, and I'm 100% with him. There is one more element I'm looking at here. I was looking at this descending channel. You can see it. So we also had like a false break higher from this. So I agree. I mean, this rejection from there looks a little bit suspicious. So I would agree that there is a good likelihood that we're going to see USD yen move lower once again.
Maybe to your dotted line that it came out of a week or so ago. That'd be around 106.
Might be the case. We have here a horizontal support area at one.
Yeah.
That's what I wrote in the weekend analysis as well. At the 106.60, we have like an area of support. Now below there, I think that below there we're headed to retest the previous lows here at 104.50 and perhaps lower than that. But you know, USD yen is also a pair that, you know, it used to respond a lot more to what was happening in the markets, and you know, its volatility has also dropped significantly. Now,
let me ask you this: going with the yen, Steve, it has been correlating fairly tightly with yields.
Yeah, of course.
I'm wondering if you think this pop we had in yields up to 180 from wherever the low was in the 10-year or whatever, if you think that was it, or there could still be new lows in yields.
So here are the yields, okay?
Yeah.
And
we actually got to 190.
Yeah. Here are the yields, and somebody can also see. I had drawn that on the bond itself, but
it was a 3 drive.
Yeah, or otherwise you can.
Look at that divergence.
There you go, as a descending wedge.
3 drives are usually in wedges.
Yeah, they usually create a wedge. So I wouldn't.
Okay.
You know, I wouldn't
that
bet
answers.
that we're going to new lows. I think there is a decent chance that, you know, we can have one more leg higher, and then by the nature of that leg higher, I think it's going to be important to determine what kind of a low is this one, the one we got below 150. Was it like, you know, a terminal low, or and you know, we are starting something to the upside, or was it just a pause in the downtrend in yields, in which case we should be looking for some type of a correction taking us back towards 2%, you know, 2 and you know 2.1, 2.2, and
we went 320 to 140, so halfway back would be 220, right?
That was a big move, and it wasn't only the fact that this was a big move. Needless to say, how many people had turned positive yields above 3% when we went above 3%, right? A lot of people were, you know, we're talking about
4.
You know, and from a technical perspective, to be honest, it made sense, because from a technical perspective, we've had a major move. I was even showing this huge inverted head and shoulders formation in the yields, since we're talking about yields. There you go. You can see it here. So yes, somebody could be easily considering this the beginning of another big move higher. But then we got this huge failure, and for me, you know, game over was once we broke below 280, because then we, first of all, created a lower low, which is not what you want to see in an uptrend. And second of all, we violated this inverted head and shoulders formation neckline. Up to that point, somebody could say, okay, we might be coming down, retesting the inverted head and shoulders formation neckline, and headed higher again. But instead of doing that, we actually breached through it. We then retested that same trend line as the resistance, and that was it. Then it was gone, and as you said, that took us lower than 1.5%. But anyhow, this move from like 3.25 down to 1.40 and change definitely at some point needed, you know, some kind of a relief rally. So as far as I'm concerned, for the time being, I think we have no reason to, you know, to see this as anything else than a relief rally. But it can definitely last longer than it has lasted already. Okay.
Thank you, buddy.
So that's what I think. And the implications of that, of course, would be that if that's the case, the USD yen can rally further before continuing lower. And that can be the case, right? I mean, we've said that it has stalled for the time being in confluence of resistances, that it might have posted a false break higher from here. But there is still no solid evidence that we're turning again lower. In general, unfortunately, that's the huge problems with markets that don't have liquidity and volatility, is that you get a lot of false starts, and that what that does after a period of time. I mean, when that lasts more than a few weeks, it erodes confidence in traders, because you took one shot on a technical formation, it didn't work out because it proved to be a false breakout, for example. You take a second shot and you get the same type of behavior. You get a third shot, and at some point you're like, just let it be. I mean, this market is not tradable at the moment unless you're a scalper, but it's not tradable to be swinging it, I mean, that easily. And then once you give up saying that, okay, this market is currently untradeable, then you get the real move beginning. Initially you might dismiss it, saying, okay, this might be another false start in this lousy market, and then that's actually the real move. But since you've had so many false starts, you dismiss the real move, and then you're like, oh my god, that was actually the real thing, and I let it go. But it is what it is. And it's preferable to lose.
That happened to me once in my career. How about you? One? Huh?
You mean 1 million times, right?
Just once, Steve.
Yeah, I know. That is why, by the way,
what a mind F it is sometimes, isn't it?
Yeah, it is. Yeah. And in order for you to avoid that, that's when you realize the huge importance of having a method in your trading. Because having a method in your trading, helps you reduce by a lot sentiment, right? So, for example, when you get frustrated because the market is lousy, having a method in your trading and measuring your performance will make it easier for you not to start doubting yourself and trying to find what's wrong with your trading method, but rather, for example, stepping back in the market and saying, okay, those are just not the proper conditions, and I need to be more patient. I need to tone down my trading, and I need to wait for the conditions to become proper once again. Now, having to do with the questions we had, and then I'm going to go to the indices. I see your questions. With Pound Aussie and Pound Kiwi, nothing really has changed here, meaning Pound Aussie, nice rejection from this corrective channel higher. So risk reward looks decent to be short currently, okay, against the highs. So I'm monitoring this channel. I like this reaction. I still think there is a decent risk reward in being short. Having to do with the Pound Kiwi, which we had another question about it, I also like the fact that, as you see, we had a little overthrow here from this ascending channel, just a little overthrow, but now we're turning lower here as well. So also a very decent risk reward. And keep in mind that overthrow actually took us to the previous high. So we retested that high at 2, got rejected, and we're now back in the channel. I would like to see a pullback to 194 and change. So I also think that the risk reward is decent for a pullback here. So Pound Aussie, Pound Kiwi, nice reaction from the highs. Perhaps a deeper correction is needed before anything else. So they look decent. Now, having to do with the Euro Aussie and the Euro Kiwi, which other people are asking for, Euro Aussie, not an impressive rebound, but nevertheless, keep in mind that Euro Aussie is still maintaining this ascending wedge. Keep in mind, this ascending wedge dates back to 2017, right? So, very, very critical formation. What's 163.40? Confluence of resistances. We're not far away from that. We might see a reaction lower from there. So Euro Aussie, we're close to resistance, but in order for me to turn bearish, I really need to see the previous low here at 160, getting broken to the downside. Then we will have also violated the ascending wedge support and the 200 DMA. The 200 DMA is there as well. I think that's going to be a wonderful technical development. There's going to be a very high likelihood that we're going to see a continuation lower if we take out that level. Okay. Now, having to do with the Euro Kiwi, Blake showed that nice reaction from the previous high, and so far, nice false breakout, nice overthrow from the symmetrical triangle. So Euro Kiwi's rejection so far, as it seems to be developing today, looks rather interesting from the level we got it. So another one that looks interesting to the downside, at least from a risk reward perspective, you have very, very manageable risk and the potential for another move towards 171, which is like 400 pips lower than we currently are. Now, having to do with indices, we had some questions about them. Thank you, Grigori. Happy birthday, Claudia. Happy birthday, Claudia. May you live another 100. So DAX, let's go. DAX and FTSE. So, okay, let's start from the S&P actually, and then I'm going to go to DAX and then the FTSE. S&P, quite a nice reaction on Friday. We were flirting for several days with a break to new highs. That actually never manifested. As you see, we have had a series of pin bars. Pin bars are, in essence, indecision candles. Okay, they can act as reversal candles if you find like a big pin bar at the end of a big move, like let's say you get a shooting star at after a big uptrend, or you get like a hammer after a big downtrend. But once you find them one after the other, they're very, very good signals for indecisions. And as you see, we've had like 1, 2, 3, 4, 5 consecutive pin bars. Then after that, we get a spinning top, which is a textbook indecision channel. And then on Friday, we had more or less the same type of price action. And at some point near the end of the day, we got a sell-off. Having said that, have we done anything from a technical perspective? No, we haven't, because the closest level we have as support is 2960. So, nice move lower to finish the week. But unless I see a break below 2960, there is nothing really to talk about here. Even if we break below 2960, we will be still somewhere in the middle of this potential wedge that you see here in purple. But at least somebody can then say, okay, we broke below 2960. There is at least a chance that we can now move again towards the ascending wedges trend line support. Until we break 2960, we're at the upper end of that wedge, and it is likely that we're going to break the new highs. So,
question, bro, are you still short?
Yeah, I am.
Okay, now, yeah, okay, I thought you were. Okay, so how many people can have a position and a bias and still be open to talking about the flip side of the coin? I think it's admirable, okay, because normally we have a bias, and then once we're in a position, we're really attached to that bias, and we kind of close our minds to what could be the other side of the coin.
Yeah, I've gotten.
I think it's pretty cool.
I've gotten over that bias. My only problem, which I think there is no correct answer to that, is and I tend to usually follow my initial plan, even when my bias changes. Not always, but when I have an initial plan for going short in a trade, I have an area in mind that I don't want to be short after that, or I don't want to be long. If price goes beyond that.
So are you, will you cut your losses at new highs?
Oh yeah, I would, because that was my
Okay.
initial plan. But I have to tell
Okay.
you that I don't believe in that position that much anymore. Not from the price action I've seen. The reason I'm not, taking it out is because, first of all, mentally I've already written that position off. Second of all, I had an initial plan. That initial plan didn't entail a big risk, so it's not like I had a big risk to say to myself, okay,
Size.
you had too much risk in place, so at least you might take, for example, this pullback as an opportunity to take losses here. So I'm just gonna let it play out, and if it breaks below 29.60, then it's fine, because then below 29.60, I'm back at break even, more or less. Then I might consider just taking the position completely off. Until then, I had a plan in place. I would have wanted to see a rejection much earlier, and I wouldn't have wanted to see this type of price action, because consolidating near the highs is rarely, not never, but rarely a bearish signal.
Right.
You can have incidents of distribution, in which case it does look like a consolidation that can continue higher. But most frequently, I would assume, 60-65% of the times, usually consolidation near the highs or a consolidation near the lows is an indication that you're going to have continuation in the direction that you were previously moving.
Great point. That's kind of like how I feel, and I have a hard time fading when price and momentum confirm to trying a reversal trade on
Yes,
that kind of action. You know what I mean? So yeah. So you have certain things that tell you it's a no touch, or
and having to do, there is a mistake that a lot of people do. They try to trade indices, stock indices, with a macro bias in mind. Forget about that. It's the stupidest thing you can do in general, but especially in the type of market environment we've had during the past couple of decades. Simply put, the way the stock markets are now trading, having this passive bid coming through, having companies not knowing where to invest their money and investing, put that in quotes, investing it in buying back their stock.
So what Steve is saying is not a theory, because I lived it and it cost me.
Yeah, absolutely.
Okay, so anyway, it's not a theory.
Absolutely. There is one thing,
I
though,
confess to stupidity.
From a fundamental perspective, there is one thing to consider. The markets have been structured with central banks' actions in monetary policy being stimulated, in essence, both directly and indirectly being responsible for the kind of a bid we see in stocks. We have this very, very prolonged, illogical, having to do with fundamentals uptrends. But keep in mind that this also creates an opposite situation, which is what?
Like what's happening in the overnight repo market.
Once at some point you have the market lose suddenly its confidence in this, the losses will be impossible to stop. So once that happens, then we'll have a period that stocks are going to be tanking like nobody's business, no matter what central banks try to do initially, as we saw happening in 2008. But that doesn't mean that you have to be short all the way higher, hoping that you will still have an account to benefit from once you get a 2008 type of event. And if somebody thinks you're not going to get again a 2008 type of event because that's a thing that happens like every 50 years, I have to tell you that it's not by accident that in 2000 you had a stock index losing 80% of its value. Because for those of you that might not have been here, let me remind you that the bubble was there then, focused more on Nasdaq, and Nasdaq lost 80% of its value. Right, Coach?
Yep. Anything with .com was going up with irrational exuberance.
Of its value. And keep in mind for the index to lose 80% of its value, a lot of
Wow.
the stocks that belong to the index went to zero. And
I
when I say
remember,
zero,
Steve,
I mean zero.
Yeah, I remember
Yeah.
when this was happening, you know, and I'd work out with some buddies, and then isn't it weird after a workout we'd go to a place called Stuffed Pizza, you know, and have a beer and carbohydrates. And anyway, there was a dentist who, you know, back then everyone was a genius making money in
Oh,
the
yeah,
market,
yeah, yeah, of
right?
course.
All right,
I've seen
so
that firsthand in Greece as well, because at the same time of that bubble, we had
Yeah.
a stock bubble in Greece, and
Yeah.
everybody, I mean, even
the shoe
people,
shine boy.
yeah, exactly. Everybody was
Yeah, that's-
suddenly involved with stocks. Everybody.
Oh yeah,
I
you'd be
mean,
at the gym and CNBC would be on 20 screens. But anyway, this dentist was starting to, you know, the drawdown was beginning. He said, "Oh, I'm getting out of all of that, you know, all that esoteric stuff, and I put it all in Cisco because it's a safe, good stock." And Cisco lost another 50-60% from that.
yes, but at least it survived,
Yeah,
right?
it survived, yeah.
Because
yeah,
a lot of them didn't survive at all. At all.
yeah.
So back to what I was saying. 2000, you had the most popular index losing 80% of its value. Just 8 years later, you have almost all indices being cut in half. Trust me, if you believe that those were random events happening one after the other, that it's just random and the next one might happen in 50 years from now,
I don't have to worry about that one.
You'd better think again. The reason why we now see that kind of instability is because when you have central banks trying to control the free market, they succeed for a time, but once they lose control, all that energy, all that dynamic energy that was building in the system needs to blow out immediately. And that's why I personally have no doubt that when the next downtrend begins, it's extremely easy that indices will be cut in half once again. What do you think, Coach? Any disagreements there?
No, not at all. In fact, when you think about it, if you think of things in terms of generations, the bull market, in my view, began in August of 1982. So we're only a couple years away, or 2 years away from 2 generations experiencing, with interruptions, of course, super bull. And you know, some of the research I've done is after that time frame's over, we then enter, not just most bear markets are, you know, 18 months, but because of the extent of this bull market lasting 2 generations, that we're going to enter a generational bear market. So when you put generational in front of anything, you're talking 20 years minimum. Just food for thought, that it may not just be.
I don't know about that, but I'm pretty sure that we're going to have like a big event happening. There's no question about it. Now, will it last long? Will it last less? It will also depend on what politicians decide to do. And let's be honest, you know, between us, the central banks are political tools, right?
Yeah.
I mean, they want to claim independence, and some of them are more independent than others. I can agree to that, but come on, I mean, you know, they're like one hand of the government, right? I mean, they're like an extension of the government in essence. If they were not an extension of government, the central bank would never ever, let's take the example of the US, would never care about things like the US-China deal. That's not their business. That's not their job. Solving fiscal policy problems is also not their problems. I mean, there is nowhere written or, you know, implied that the central bank should try to fight with monetary policy fiscal issues. Quite the opposite. Quite the opposite. But, you know, the fact that they're actually trying to help, you know, fiscal situations with monetary policy shows that they also, you know, think of themselves as an extension of government. And that there lies the problem, actually. Now, we had a friend asking here about the DAX. The DAX is clearly in a consolidation. Okay, I mean, somebody can say, oh, we found the double top at the 88.6, and that might be the case. Keep in mind that this is a very small range, so that can be the case. But for the time being, I mean, we had quite a strong uptrend after breaking the inverted and the shoulders formation. We fulfilled the target. We moved even higher than that, and a period of consolidation makes sense. I drew that. I would want to hope that a pullback towards 12,100 can take place, and it might. But on the other hand, we might just spend a little bit of time consolidating in the same area and then seeing one more move higher, perhaps towards 12,600 before seeing a deeper correction. So it remains to be seen what kind of a corrective move we are seeing here. Is it a horizontal consolidation, something like a little bull flag, a triangle or whatever, or is it going to be a little bit deeper? In any case, 12,100 looks like a decent area to try to buy it. Now, buying after just a few days of consolidation here, it can work, but where would you place your stop loss? So bottom line, there's no risk reward to buy here, despite the fact that we've spent a few days, oscillating in the range. Okay, so if you want to be long, you would have to wait for lower levels, despite knowing that this might not happen yet. Okay, that's my point of view here. Aussie Swiss, yeah. Gold, yeah. The market can stay irrational longer than you can stay solvent. That's a big truth. Don't worry, as long as Trump is there, we're not going to have a collapse in S&P. He's going to try, Grigori, but don't be that certain about it. If it was always in the hands of politicians for things to work out nicely, then we wouldn't even know what a bear market is.
So we used to have a Fed put, now we have a Trump put. How about that?
We have a Trump put, more or less.
Well, I mean, that's what I'm saying. People are buying that narrative. So he's not the first one that has said that. I mean, that guy I interviewed that I forgot his name. Who's talking about what 40,000 Dow, and it's all based upon Trump, and he's a good trader, good guy. Anyway, go ahead. Sorry.
Okay. Okay. Good luck. Good luck with that prediction, Belgium. So gold, nice recovery. Still can prove to be a head and shoulders formation. So critical level, super important level, 1525. We're not far away from that. Okay. So 1525, in my opinion, is going to be very important to determine what's happening here. Is it still due for one more leg lower, which I still think there is a decent chance? Or are we going straight to new highs? I still believe that ideally we should have one more leg to the downside. And same deal with silver. Silver has a very nice day today, as you see, currently retesting this horizontal support resistance area and the broken ascending channels support as a resistance. So I want to see what silver is going to do here. Both of them, anyhow, very close to important support resistance areas. I want to see how they're going to react from here. And from there, I'm going to determine if, we need to correct lower first, or we might even end up going to new highs from where we are. And those are Swiss, and I'm done. Do we have an interview today, by the way, Coach?
Canceled an hour ago.
Oh,
gave me a lot of notice.
You know what I was thinking about, Coach? That we should have a webinar for those that are interested, speaking solely about the history of central banks with data, and everybody can judge for themselves if central banks are what we should actually have or not in our financial system.
I tell you, Jim Welch would be great for that panel. Just right off the top of my head.
I'm up for it. We can have a discussion about central banks.
Let's talk about that in our meeting today.
For example, about how and why the Fed was established. What was its initial mandate? Why its mandate changed? Under what circumstances? how Congress changed law to accommodate the new changes in the rules of the Fed.
What's that book with Jekyll Island in the title? I bet our crew knows it out there in face. Something about Jekyll Island.
It's very interesting. It's very interesting for somebody to go back and track the history of central banks, and how they have developed their influence.
The Lords of Finance. It has something to do on Jekyll Island and is in the title. Anyway, it's kind of a expose of the real underpinnings of the rationale for the Fed, and it's not humanitarian. Let me just put it that way. Okay.
Sorry for my saying, but no shit, Sherlock.
Yeah, I mean, it's not for the betterment of mankind, so they're not going to win the Nobel Peace Prize. I don't think any Fed chairman ever won the Nobel Peace Prize. Anyway, we got to play the game we're in, buddy. I mean, this is the casino, absolutely. And we're just going to, use our charts. Use our trader instinct, be disciplined, probe and protect, and be there when things really begin to trend.
Yeah, and definitely being angry with a system that doesn't work correctly should not be expressed as a trading position, right? That would be stupid belief to say.
Sabotage.
Yeah.
Self-sabotage.
It's self-sabotage, exactly.
Yeah. Anyway,
because I see a lot of people that understand what's happening with the system, and for some reason, I don't know if they do it subconsciously, but it's like they're trying to trade in a way that they will be vindicated if actually the system breaks down. But
because they're broke, they'll feel better when everyone else is.
Yeah, whatever.
I'm telling you, in some levels, it's that way. I would like to see the stock market collapse. I've been struggling so long for everything. I didn't participate in this. It didn't make me rich. So, boy, I'd like to see the rich take a hit and know what it's like to worry about paying their rent next month.
Bob, by the way, says The Lords of Finance. Is that the book, The Lords of Finance? Is that?
I'm not sure. But, Steve, I was thinking when markets are dull, what do you think of have you ever seen those reality shows, Naked and Afraid, or no, it's two people. It's a man and a woman who are put on an island, and they have to be survivalists for a week.
No, but just from since we still have, I mean, a lot of people have already bailed out, but we still have like more than 150 people here, although it's slow. How many of you, if you want to please type in the chat, how many of you would be interested in a webinar talking about the role of central banks in the economy and their history? Okay.
Very good response.
Yeah. Oh, we keep having yes, I would, yes, 100%, yes.
How about if we gave away a gold coin? If you attended. Any more yeses?
It's the only way you can get something that will have value in 100 years from now anyhow.
That would be a good time to use that promo, wouldn't it?
Yeah, it would. Okay, Aussie Swiss. Last time we checked it, and as you see, as I was speaking, I changed the technical analysis. Last time I checked it, I was showing that, once we break down from this triangle, we should move lower. That has already happened. We actually broke down, retested, moved lower, and we're seeing a nice rebound from here. But I have to tell you, same deal applies. As long as we stay below this trend line, which currently passes from 69.50, I really think that it's quite dangerous position being short. Probably we've already fulfilled. Somebody can say that we had a double bottom here. There you go. So nice double bottom here. Let's see its implied target. Okay. So let's see what target that had, because probably more or less we fill that target. Yeah, there you go. You see, exactly. So double bottom, target filled, and lower. So two things to note here. One, this previous range's support can act, resistance can act as support. So what's 66.70 as support? I mean, selling close to 66.70 makes no sense. Now, if we rebound from there, we might see another leg higher. Let's actually draw that. So if we rebound from there, we might see another leg higher towards that area, retesting that trend line. Okay, if we fail from there, expect new lows. As simple as that. Okay.
That's a wrap.
Grigori, I'm in the market since 99, so it would be boring for me, sorry. Keep in mind that we're talking about going back to 1913, right? I mean, talking about the Fed, for example, since 1913, with detail about, you know, mandates, initial effects, what they did in 29, etc. So we
You know,
go
they
back
had
in
one.
history.
I think they had one in the U.S. before that called the U.S. Bank. I think it was during the 1850s or something. It had to do with silver, and there was all kinds of stuff happening because it was real money back then too.
It was
So
real money, so
yeah,
that's one of the reasons I don't think it's so interesting going back before 1913. I don't think it's
yeah.
that interesting going back before
Well,
that.
maybe even
But it is
Bretton Woods.
but it is very interesting to go through the history. Of course, Bretton Woods in 1971 and what happened
Yeah,
then is going to
yeah,
be a big focus. You know, it's the main focus of these
yeah,
70s. Obviously, there's no question about it. In essence, 1971 is when we had a complete change of the monetary system to an experiment that had never been tried before. Having all fiat currencies, right? Having all
yeah,
currencies being based purely on faith, right?
yeah. It's
I'm
hard,
pretty
you
sure
know.
that
I mean, that
I'm
word
pretty
to
sure
me,
I'm
yeah,
pretty sure that when historians go back in 100 years from now and talk about that period of monetary system, 1971 to, you know, you can fill in the number of when that
yeah,
ends, they're not going
yeah.
to have, you know, two good words to say about it. I can tell you that much.
Well, it wasn't humanitarian anyway. Anyway, Steve. All right. Well, let's talk about that. And great coverage with not much to talk about today, guys. Maybe there'll be some setups for Turnaround Tuesday. I have Mandy is going to be with us tomorrow, and she's, you know, really, she coaches people very much into psychology and holistic and getting to the root issues of how we sabotage ourselves psychologically, because we all do. You know, we all have a paradigm. You know, maybe you get out of the market too soon, like me, because take profits too soon because it's just your emotional makeup of wanting to not see something. Maybe you have a little scarcity from your childhood and you go, whoa, I profits made, I'm taking it. So anyway, Mandy, it'll be great for you to take a look in the mirror for what you're going to be, what you do every day in this market. It's easy to,
Is she
yeah,
the psychologist lady which we had in the past?
yeah,
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 I remember her.
yeah. She's from
She's very likable.
Australia.
Yeah, she's
Yeah,
very likable. Yeah,
yeah.
I remember
So
her.
she has a nice following. So actually, it's because Peter Bookvar had a meeting. He couldn't make it. It's one of those weeks he couldn't make it.
Ah, too bad.
So
Peter
but you
is
know what,
excellent.
Steve? I really, you know, in every sport, like in the NFL, they say next man up. We have a real nice bench here
Oh yeah, for sure. There's no
at
question about it.
Phase, you know. So it,
Although Peter, yeah, along with, you know, let's say a dozen more, they're like, you know, the top players
yeah,
in the league, right?
yeah. So you have all stars, but you have the guys that hit for the average and are there every day. And you know, sometimes, Steve, it's not the guys with the biggest reputation that have the wisest insights. So I try not to. That's why I bring a lot of people on that don't have
Oh, I agree with you.
massive
100%.
followings.
Plus,
Diamonds
everybody
in the
starts.
rough.
Everybody starts from somewhere, right? I mean,
Diamonds in the rough.
All those well-known and famous people we brought, they weren't born to be like recognized traders or economists or whatever, right? They became.
Well, you know what?
They
Even
became.
rock stars. There was a show about Mark Knopfler. You know the band Dire Straits. Great music. You don't know that one? Sultans of Swing.
Yeah, of course.
Okay. Well, Knopfler quit because he couldn't find one good thing about fame. He walked away from Dire Straits at the top. He gives away his music to other singers. For some people that could be famous, they don't want it. I mean, like Blake had Ronnie on. Ronnie doesn't tweet to get attention. He makes money in a closet. So, don't always fall for the marketing, guys. That's what I'm saying. Okay?
Oh, absolutely. When you see like Lamborghinis, jets, and all that BS,
Yeah. Now I'm going to take a selfie of me leaving right now as I close the show to get into my new green Gremlin, which I traded my Pinto in for. And guys, have a great trading session. Don't just count your pips, count your blessings. Thank you, Steve. It's always, I have such a great time working with you guys. So, and you too, FaZe. You too, FaZe. So have a good one, and we'll be back for turnaround Tuesday. Trade safe. Adios. Happy birthday again, Claudia.
Happy birthday.